All right, what is up, tycoons? What's up, traders? Super excited for today's video. We're going to take a look at TLT as well as ZROZ, and we're going to see how it has performed against the Fed pivot, and if the market tends to bottom before the Fed pivot or if it bottoms after the Fed pivot. A lot of people really like looking at the Fed pivots and comparing it to the stock market, but the bond market is very slept on, and it's actually much more massive than the stock market itself, and is a better outlook for the economy and really understanding some of the things going on in the economy. So we're going to break that down in today's video, as well as go over an analysis on ZROZ, so that way you guys are up to date on some of the current price action. Make sure to smash that like button, subscribe to the channel, and we'll jump straight into it. So what we have here is TLT in blue, and then we have ZROZ right here in orange. This is the bottom right here. Is actually happened in October of 2018, but the last rate hike was over here in December of 2018. So you can see the bond market actually bottomed before the rate hike, or before the last rate hike. And so what happens is investors, all right, they're anticipating the last rate hike. Okay, so they're anticipating the pivot and then the rate cuts. And you can see that they actually bottom and start to rally before the actual last rate hike starts. Okay, and then over here in August of 2019, this is when you actually get the first rate cut itself, and you can see that it's already put in a bottom before. Now the stock market, on the other hand, I just did a video on it, doesn't tend to normally do that. We actually tend to see a bottom in the stock market after the Fed pivot. If we take a look at the next one, we can see over here, ZROZ hasn't been around as long, but TLT back in the '07, so in '06, right, they had the last rate hike, then they had the first rate cut here in 2007, and you can see that again TLT bottomed before the last rate hike and then was up by the time that the first rate cut actually started. This is the info that we pretty much just went over in the last slide right here, but if you take a look, I actually put the Fed fund rate on here so you guys can visualize. The Fed fund rate is going to be in red. All right, same thing, TLT in blue and ZROZ here in orange. All right, you can see in this period of free money, essentially, when the Fed fund rate is down here, that both ZROZ and TLT are going up, right? And as soon as the Fed fund rate starts to go up, you see both of them start to go down. But take a look, right? So this is our last rate hike at this period, and you can see that's when we get our bottom. All right, we come up, we start rallying, and then the first rate cut happens right over here, right? And we can see that TLT starts going up. So, when it comes to the bond market and TLT and ZROZ, the data for those two tickers is not as, extensive as it is compared to like the S&P 500 per se. But it is pretty nice to look at these things and get an idea of how they've been reacting to the Fed policy and the Fed fund rate since they've been around. Right over here, we can clearly see that stuff again. Right, so the bottom actually happened here in TLT and ZROZ, but the Fed fund rate actually went up higher. So that's what I was saying earlier. It is bottoming before the last rate hike. It's kind of anticipating that, and then rates stay flat, and eventually they go down, and it's already up a significant amount. Now, it didn't really go up a significant amount over here in the past. Okay, so just because the last rate hike happens, it doesn't mean that there's going to be a huge rally. That doesn't always have to happen, but it did go up previously in the past, last time we did the last rate hike and the time that we got the first rate cut. Now when we look at ZROZ, okay, we recently just broke a long-term trend line. Okay, you can see we had this trend line here. We're rejecting a few times. We got a clean breakout right here, and then we came back down, retested that trend line, and we've started to consolidate a little bit, right? So we need to see, are we actually breaking out of this trend and potentially trying to head higher, or was this maybe a false breakout, and are we really just consolidating and perhaps really just going to chop around and move sideways? If we zoom in a little bit, right, we can actually see that we had a nice double top M pattern forming here, right? We had a top here, and we ended up playing out this M pattern very nicely. If we look at the next slide, this is going to take off that M pattern since it's already played out, and it's going to show you guys the MACD and the FIBS. All right, so the MACD is pretty useful, especially on the daily time frame. It's most effective. A lot of people use it on the weekly or even smaller time frames, such as maybe like the 4-hour, 1 hour, 5-minute, things like that. But I really like to look at it on the daily, and you can spot potential entry and exit signals based off the MACD. So those signals are going to be this red line here. When it crosses below the blue line, you can see that we actually got a big downwards push afterwards, and we started trading in this bearish channel right here. Now we also have the fib levels on here, okay? And these are the three most common and well-respected levels. Those are going to be the 38.2, the 50%, and the 61.8% levels. There are other retracement levels, but these three are the most common and well-respected. And so what we're doing is taking the swing low, connecting it up here to the swing high. So you see we've had this large move to the upside, and these are going to be the three major retracement levels to possibly continue that uptrend that we have after getting the breakout of that long-term trend line. Okay. So if we end up actually breaking through those levels, then that's going to be really important to see. Okay. Now we also have a lot of these blue boxes on here. These are gaps, okay, and these gaps on the daily chart, they fill about 90% of the time. And we can see, after we broke out of this channel, we actually did come up and fill all of these gaps, okay? Now, recently, we created a gap down on the process of coming up. And you can see that what we did was we actually just recently came down and filled that gap most recently again. So it's going to be interesting to see, does this thing continue to fall lower and potentially fill this gap down here in the $81 range? One thing that we can look for to help give us some guidance, again, is going to be that MACD. All right, there is the potential that if this thing curls back up above the blue line here, all right, just as it previously did in the past, we could see another rally, and we could potentially put in a double bottom down here right around this 86, 89 level. Remember, we just take a look at the M pattern that we had here with the double top. We could put in a W pattern, a larger W pattern, where we put in a bottom here. We have the move up, a bottom here, and potentially get the move up again. So definitely pay close attention right around that 86, 89 level. We're currently battling 89, 78 as resistance. So, those are kind of the major levels that I'm watching right now. Right, this is going to be your bearish scenario. So as I mentioned, the retracement levels are really key for establishing that trend continuation. We've already started to come down here and consolidate. And if you break through these retracement levels, right, and you flip 86, 89 from support to resistance, then most likely, you're going to see a reversal rather than the trend continuation. Okay, so that's basically going to be our bearish scenario here, is breaking below 86, 89 and heading towards the gap fill here around $81. This is going to be our bullish scenario. Okay, so we've moved up, we've had a healthy retracement, we found support exactly at the 61.8% retracement level, right? We literally bounced exactly right there and continued to head upwards, and we've started to consolidate, but we're making a low and a higher low. We have a low, higher low, higher low, higher low. So the higher low uptrend is still in place. What we haven't done is really just continue to make higher highs. Okay, we're starting to make, a high and a lower high. So, in this period of consolidation, we're going to see, whether we break below those levels or whether we get a bullish continuation after this consolidation. If that's the case, most likely we're going to retest some of our previous highs, either here around 102 or right around 100. So that's actually it for today's video. Just a quick update. Wanted to show you guys how the bond market reacts to the Fed pivots, how TLT and ZROZ specifically have reacted to it. And hopefully you enjoyed that video. All right. If you did, smash the like button, subscribe to the channel if you guys are new, and I'm out.